Good morning. Welcome to our webinar on cost transparency. We are going to cover cost transparency from both a trustee's perspective and we're also going to hear from a technician today. We're going to provide you with some insight on what is cost transparency, why should we care about cost transparency, and how we as an industry, the pensions industry, are going to achieve cost transparency. We'll provide both a high-level overview of cost transparency, but we're also going to get into some detail. So for example, we're going to look at the CTI templates. So just to introduce ourselves, I'm Pat Sharman. I've been in the industry for 34 years, but more importantly for this webinar, I am actually being the trustee for the past 5 years for both DB and DC schemes. I'm going to try and get us, the trustees, some answers on cost transparency. Scott.
Hi, good morning everybody. My name is Scott Foster and today I'm your technician. At KAS Bank UK, I'm a cost transparency specialist and I've been helping our UK pension scheme clients with their cost reporting since 2016. From a Dutch perspective, we are a European custodian bank and we've been helping pension schemes in the Netherlands conduct their cost reporting since 2015, where it's become a regulatory obligation to do so.
So Scott, let's kick this off. Why should us trustees care about cost transparency?
Pat, that's a great question, which I think is summarised by this quote. You can't manage what you don't measure. From my experience as a pension fund cost transparency specialist, I've been helping pension schemes with their cost reporting, and from the view from the ground is, from the pension fund trustees, the investment committees and the consultants, is that they're shocked by what they were seeing in our cost transparency reports. A lot of people within those schemes had not fully appreciated the impact of transaction costs. And the next question a lot of people are asking is, once we've got this cost data, what do we do with it? Where do we go from here?
Okay, so there's some really interesting comments from some of KAS Bank's clients. So really, what does this actually mean in hard numbers, Scott?
Great question, Pat. And as a technician, I'm a numbers guy, so here's some numbers for you. From an investment cost perspective, investment costs are typically 3 times higher than in-house estimates, and that's across both UK and Dutch pension schemes. This, combined with the fact that compounding matters, means that schemes should really take cost transparency and their value for money assessments seriously.
So there's some really big numbers there, Scott. So really, pension schemes underestimate their investment costs by up to 3 times? That sounds like a lot of hype to me, Scott. So please explain more.
Yeah, so 3 times higher is a big number. And let me break it down for you. So that 3 times higher figure is largely driven by a big reveal on transaction costs, where they have been previously unreported. There are some other cost elements in there, such as miscellaneous cost items, especially in pooled funds, that have also driven this 3 times higher estimate up. Cost transparency as a process provides pension schemes the ability to uncover these costs across the whole value chain.
Okay, Scott, so that is really interesting. But what I actually want to know, what is cost transparency?
Yeah, that's a really good question, Pat. And the bottom line base case is, you want to find your bottom line figure for what it costs to run the pension scheme. At KAS Bank, we emphasize identifying what's called the total cost of ownership of running the pension scheme. And that captures pension management costs and investment costs. Pension management costs are typically the costs associated with running the legal entity of the pension scheme, and the investment cost piece largely covers all the costs related to your investment mandates. The next question from there is, once you've got that total cost of ownership figure, you should be able to break down that information into the sum of its parts. For example, what percentage of my total cost of ownership is investment costs? What percentage of my total cost of ownership is transaction costs? And when you're looking at your investment costs, being able to break it down by asset class, asset type, manager, and mandate is really, really important. So you can have a better understanding of what's going on in your scheme and really assess the impact that these costs are having.
So that sounds really good, Scott, and it gives me somewhere to start. But what I'm still fascinated with is these investment costs are so much higher than trustees and pension schemes are estimating. So tell me a little bit more. Can we break those investment costs down?
That's a really good question, Pat. And we've done a lot of research on cost transparency here at KAS Bank, and we're going to break down some of the figures that we've collected from both a UK and Dutch perspective. So if you look at your spectrum of investment costs, you can identify what are called your management fees, your transaction costs, your performance fees, a Dutch term, general investment costs, and other or miscellaneous cost items. If we go into each type, you can identify from our research what percentage of those fees are related to the total investment cost of running a pension scheme. So on the management fee base, you can see it's around 50% of total investment costs, and these are generally captured under what's called the annual management charge, or AMC. If we look at transaction costs, this captures both explicit and implicit transaction costs, which are related to the buying, borrowing, selling and lending of financial instruments, and they take up roughly around 25% of total investment costs. Of course, we have performance fees, which are paid for exceeding a benchmark. That captures around 10%. And general investment costs, which make up custody fees, performance measurement fees, and investment consultancy fees. They make up another 10%. And of course, you have another cost item called other costs or miscellaneous cost items. And these costs are usually associated with investing in pooled fund structures. These make up around 5% of the costs.
Okay, thank you, Scott. I think that gives us a better understanding of some of the areas we need to focus on as trustees. But I still, I want to just come back to why we should care. So first of all, trustees out there, if you're a trustee for a DC scheme, we already have to carry out a value for money assessment on behalf of our members. We also have to report those findings on the chair's statement. Now, I know from experience this is a really complex task, not easy to do. The government and the industry bodies also plan to further protect DB schemes, and there are plans underway that actually DB schemes will have to carry out a value for money assessment and also report onto their share statement. So don't think because you're a trustee for a DB scheme you're going to get away with this. We're all going to have to look at cost transparency. But then I think as trustees, we should all look at the success of the LGPS and what they've done for their code of transparency. They're actually responsible for nearly just over 300 billion of assets. And they implemented their code of transparency, or their cost transparency code, in 2017. And now have 110 asset managers signed up to that code of transparency. And what that means is the asset managers have to provide any cost data that they request. And if you don't sign up to the code as an asset manager, you don't get the job. I think that's a great example to us all. So, when we actually look at where we start, where do we actually start as trustees? So I think we're all behind this. We know it's going to be an obligation, or some of us it's already an obligation. But where do we start, Scott? How do we actually collect this cost data?
Great question, Pat. And that builds on the work that the LGPS have done with their code of transparency. So there's a new set of templates out there developed by what's called the Cost Transparency Initiative. And this brings together the collective work of the FCA IDWG, the LGPS, the Investment Association, and the PLSA. It's an all-inclusive template which covers most asset classes, including alternative investment classes. The key thing about this template is that it does not capture the total cost of ownership, but it does cover investment costs in granular detail. Here, as you can see on the screen, there's a 10-step process in terms of what information is provided from an investment manager to the asset owners. Step 1 is account information, and this involves general information identifying the relevant investment account. This is mandate name, asset type, and who the report is being generated for. Step 2 is the portfolio investment activity. And this really drives context to the costs that are being reported. This includes the start assets under management, the end assets under management, and as well as that turnover information, so sales and purchases within that investment vehicle. Step number 3 captures all of the portfolio transaction costs related to trading activity. Step number 4 uncovers ongoing charges, and these are costs related to the management of the financial product. Step number 5, incidental costs, is another term for performance fees. Step number 6 is lending and borrowing fees, which captures the costs related to those services. Step number 7, property expenses, captures all real estate assets and their associated costs. And step number 8 captures one-off costs, so entry or exit fees or FX costs within a pooled vehicle. Step number 9 again drives context to all these costs, where it provides you information on gross returns and net returns incurred within the investment vehicle during the reporting period. And step number 10 includes stock lending information.
So, okay, Scott, that's a lot of data. And we haven't really still covered off transaction costs. So tell me a little bit more about that, because that takes up so much of the investment costs anyway.
Yeah, you're right, Pat. Transaction costs do make up a lot of the investment costs. And as well as that, there has been a lack of transparency around transaction costs previously, due to the fact there hadn't been a consistent reporting methodology to do so. But in these CTI templates in the screen that you can see there, you can drive cost information by asset class. So what are my transaction costs incurred by asset class? The template covers transaction taxes. The template also covers brokerage fees, which includes exchange fees, settlement fees, and clearing fees. As well as that, it captures transaction service costs. These are costs related to appraisals, surveys, studies, searches, and due diligence, for example. And as well as that, it captures implicit transaction costs. These templates employ the slippage cost methodology, which is in line with MiFID II and PRIPS, the industry standard for transparency in the European markets. And this is the implied cost incurred in the act of trading. As well as that, the template also captures indirect costs, which are transaction costs indirectly involved in a pooled fund and its underlying vehicles within that. And as well as that, the template also captures anti-dilution offset fees, which are related to the subscription or redemptions to or from a fund.
Blimey, Scott, that's a lot of data. Yeah. And it sounds very, very complex. So, okay, I have the standardised template, which without a doubt will help us all. But where do we go from there?
Yeah.
I've collected the data, what next?
Exactly right, Pat. And with the CTI templates, we've got a consistent and standardised methodology to collect cost data for institutional investors, which is a great step. But here at KAS Bank, we also employ a 7-step process for collecting, analysing, and reporting that information back to pension schemes. So the first few steps capture data collection with our pension cost specialists, and as well as that, we blend hands-on analysis with technology to really analyze the cost data to make sure it's accurate and the integrity of the data is secure. The next step, once we've collected all of that cost data, is really reporting that back to a pension scheme through visualization tools such as dashboards. And this is to really help trustees and their investment committees really drive the interpretation of what this cost data is really telling us. We think that these visualization tools really bring cost data to life.
So, okay, thank you, Scott. I think, it's certainly I'm getting a better idea of how we can collect these costs and what we do with them. So going back to how does cost transparency help us as trustees, I think we can all agree that definitely with more data on costs, it can help us make more informed decision making. I think then also improve the governance of our pension schemes. But I think we have to also go back to the fact this isn't just about cost savings. This is about helping us actually undertake value for money assessments. We need to ensure we do this in context of the strategy, of the fund performance and the service that we're receiving. And I think ultimately here, we actually can potentially improve member outcomes. And I think that is ultimately what we're trying to do here. So, but what I would like to do is just go back to transaction costs quickly because they are so complex. So I'd like to talk a little bit more about those.
Well, happy to do so, Pat. So as we know now, transaction costs can make up 20% of the total cost of ownership of running a pension scheme. That's 25% of your total investment costs. So if we look back at the past, the previous view on costs was the use of several ratios. So the total expense ratio, the ongoing charges figure, or just the plain old AMC, annual management charge. In our view, there's tangible benefits to unbundling those ratios, which, as you can see on the graph on the screen in front of you, these don't incorporate transaction costs. The point of unbundling these ratios is really to investigate and challenge the underlying fees within all of these ratios so that you can make detailed value for money assessments and make informed decision making on costs.
Thank you, Scott. I think, there's some really interesting facts there about transaction costs and costs in total. But I think we need to go back to this message that we as trustees must not look at costs in isolation. We need to be very careful. We do need to make sure that we look at them in context of strategy. I'm going to say this again, of the scheme, the actual underlying fund performance of the manager, and also the service that we're taking. I think we need to be really careful of this.
I completely agree, Pat. And from our perspective, working with pension schemes on the ground in the UK, a really strong point in these meetings is cost transparency is not a cost reduction exercise. It's really about understanding the underlying cost information related to your investment mandates and really driving value for money assessments from that. From our perspective, we also believe that benchmarking across asset classes, cost types, and size of pension schemes, both in the DB and DC universe, and don't forget the LGPS, is really, really valuable.
So, all great stuff. It's a lot of work, Scott. So what results have you actually seen in both the Netherlands and in the UK since you've been actually undertaking cost transparency on behalf of pension schemes?
Yeah, so Pat, it is a lot of work. And from a cost transparency perspective, we've put a lot of effort into this. And this is particularly evidenced in the Netherlands, where there's been a lot of positive results around cost transparency. From a KAS Bank perspective, the findings of around a third of the Dutch pension fund market are quite positive on costs. And as well as that, these are complemented by the total Dutch universe findings, where DB cost data is submitted to the Dutch central bank annually, and that captures the total cost of ownership. And in both sections, we've seen costs being driven down over that 3-year period. In the UK, we've been working with a lot of pension schemes, and we're starting to now adopt the CTI templates, which I truly believe can drive operational efficiency in the marketplace.
Thank you, Scott. Some really positive results there from the Netherlands and also from the UK that us trustees can learn from. So as trustees, where do we start? So we've created this very simple checklist. So number one, as trustees, we can firstly start with what we already have. So start analysing that cost data. We can now ask our asset managers to complete the CTI template. We now have a standardised process for collecting costs from our asset managers. We do need to remember to review costs in context and not in isolation. For DC, we already have an obligation to undertake value for money assessments, and the CTI template will definitely help us do that. And we need to report our findings on the chair statement. And of course, speak to your advisors, speak to any specialists out in the market. They can help and support you. So, just to wrap up, thank you very much for listening to our webinar today. We hope you found the session useful, And now Scott and I are available for questions. Thank you.